Indiana has become more of a storm state, and as such, it seems like everybody's like, well, I'm just going to wait for the next storm. I'm going to get a new roof. I'm going to wait for the next storm. Insurance companies really aren't into just writing a check for a new roof. I mean, you're paying $3,000 a year for coverage, and every 5 years you're turning in a $15,000 claim. That's not a way to keep your insurance. Insurance companies aren't good with that. So what are they doing to combat that?
Well, what makes it hard for the consumer and the contractors is that there isn't a guideline that's out there.
Mm-hmm.
There isn't. There's not one that says this much has to be damaged. It's just our best guess. So that's the first problem. To answer your question, though, they're changing how policies are written
Mm-hmm.
when clients are renewing. Speaking from experience,
Mm-hmm.
I renewed a policy recently. I had to change it.
I did too. I had the very same thing happen.
And my deductible went up 3 or 4 times what it was.
Mm-hmm.
And as clients go to, so there's lots of different ways they're changing it. They're increasing deductibles. The $500,000 deductibles will be gone, or will be non-existent within a year or two.
Percentage of loss.
Percentage
of insured value.
Percentage of insured value.
Yeah.
So people get that confused. They think if they buy their home at $300,000, that their deductible, if it's at a 1%, is going to be $3,000.
Mm-hmm.
Well, typically, what the insurance company is doing, and probably rightfully so,
definitely rightfully so,
they are insuring it for what they think and the policyholder think that it will cost to rebuild it. So
that is oftentimes way more than what they bought the house
for. So that might be $500,000. So if it's now they have a $5,000 deductible, not a $3,000
on a $15,000 roof.
You got it.
Mm-hmm.
And so now the exposure for the insurance company is significantly reduced, and the consumer, the owner of the home, has to decide if they want to, pay that $5,000 now to get the value of their policy.
And you're stretching the point of reasonableness of being able to try to find just hucking a truck to say, hey, I'll write that deductible off. It's not generally happening on your higher deductibles.
So what I like about this is that we don't call in claims that aren't valid.
Yeah.
And so when we
don't get a lot of denials.
No. And we are going to typically try to give a client a range of price of their project. It's not always accurate. We're shooting from the hip, but it's usually pretty close. And that way we can give them the value of the project, of them filing a claim. We've had clients this year that their deductible was more than their roof. I'm sorry.
Yeah.
Because it was for a total loss, basically, or tornado.
Yeah.
And so they were like, "Oh my gosh, thank you for telling me.
Mm-hmm.
I didn't have to file a claim.
I'm not going to file a claim.
I still have to do this.
I still have to do the work.
but I'm not going to file a claim. The value isn't there for me."